This is Alan Bush with ADMIS with the daily financial forecast for November 3rd. In the stock index futures, we are seeing prices a little bit lower in the overnight trade. However, there has been some recovery almost to the unchanged level. This after the New York Institute for Supply Management Index coming in quite a bit better than expected. Also, we did have the NASDAQ index advancing yesterday to a new 15-year high. We also feel that the other indices, either later this year or into next year, probably next year, will also be making some new highs. So nothing really changing in our long-term view on the stock index futures. The main trend still appears to be higher, even though earnings for the third quarter are likely to show a 3.9% decline, according to a recent survey. I think what traders are focusing on more, though, is the likelihood of a delayed increase in interest rates from the Fed and central bank economic expansion activities, more QE possibly from the European Central Bank, more QE likely from the Bank of Japan. So longer term, more stimulus for the global economy, I think, is on its way, and that will be the driver that takes stock index futures higher. Over in the currencies, we are seeing the dollar index advancing this after the New York ISM coming in quite a bit better than expected. Most of the other currencies under some pressure for the same reason. The dollar gains on better economic news that's pressuring other currencies. One exception, though, is the Australian dollar, which is higher this after the Reserve Bank of Australia at their policy meeting, leaving interest rate policies unchanged. Their benchmark interest rate remains steady at 2%. There was a minority opinion that they could have lowered that rate by 25 basis points. So with a steady policy there, no rate cut from the RBA, the Australian dollar advancing. And in the interest rate futures markets, some pressure, especially at the long end. Looks like longs may be liquidating some of their positions ahead of Yellen's testimony before a congressional panel tomorrow. I think once that testimony is out of the way tomorrow, that we can see some recovery gains in the interest rate futures markets, especially at the long end, namely the 30-year bonds. And I think longer term, if we're right that more stimulus is coming globally from various central banks, that the long end should be the prime beneficiary. So longer term, still looking for higher prices for the 30-year Treasury bonds. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.